Hey Sharks, I hope you all are hanging in there. This past week has been extremely rough. As you can see on my screen, this is one of my portfolio, the Schwab portfolio. This is my first time showing this to you guys. Yeah, you can see it's in the some positions are in the red, especially Hood. This is a position I have been in for quite some time, doing really well, and then now we have this major pullback and just in the broad market in general, in crypto in general. And this has a lot to do with the current macroeconomics and geopolitics. Off the top of my head, the carry trade, the Japanese carry trade, if you guys don't know, that is the where institutions can borrow the Japanese yen at 0% and then redeploy that capital into assets like the stock market, crypto, real estate for a return. But now the Japanese Fed have increased the interest rate, which now there's no more free money, and the institutions are exiting their positions, which causes a domino effect, like a cascade effect, where they're exiting the positions, and these institutions have hundreds of millions of dollars, so that affects the movement of the stock prices. Now we're talking about the stock market because this is what I do. I trade stocks and also trade options as well. And when that happens, you have limit orders where investors are taking profit, right? So the limit orders get triggered, that causes the stock to sell off. Then on top of that, you have borrowed money, margin, leverage money that also gets triggered. And then those investors, they cannot cover, that causes the stock to sell off even more. So it's a complete domino effect all across the board. And the fear and greed index right now is the greed is very high. So when the greed is high, as an investor, as an option trader, you have to be more conservative. All right. This is like what legendary Warren Buffett has said. When others are greedy, be fearful, and be fearful when others are greedy. So when there's too much greed, you have to be more conservative with your trades. You want to stay off margin unless it's like an A plus setup, A plus play. Okay. But when there's too much greed in the market, I would you're best off really limiting your use on margin. And in this portfolio, I'm only using I would say like 10% of my margin, so I'm okay. But my other portfolio, Robinhood, I'm using a little bit more, which got myself in trouble. But I have an exit plan, and I'll show you guys. But either way, Hood is one of the positions that I'm pretty stuck underwater, about minus 20K here. But other than that, that's the only one that's really affecting this portfolio. Everything else, like you can see from my content previously, AMKR, I'm very bullish on. BE, I'm very bullish on. And GLW, these three are my power plays. And they're doing good, right? They're hanging on nice and steady. Okay, and also Archer too. Archer, I have 1,000 shares here. Cost base is a 743. And then I also bought 10 contracts, leaps on Archer at a $5 strike. So we just gotta let time run its course. Archer has their earnings on the 25th. Hood has their earnings on the 10th. Now Hood is a wild card because Hood could be selected. There's a possibility that Hood could be the official brokerage for the Trump accounts. So if you don't know what the Trump accounts are, the Trump accounts is it's a legislation passed by President Trump that every newborn out there can get access to $1,000 to in a brokerage account. Now we don't know which brokerage is going to get awarded this opportunity, but I hope it's Robinhood because I would love to have the stock recover and then get out of this position because I've been in this play for a little bit too long. But let's see how that goes. Vlad, the CEO, has been on record since last year saying that they are in a good position to be awarded the brokerage. So we'll have to see how that plays out. Even Trump mentioned his name a few times. So I think that Vlad they'll hold on to that information and share that during earnings, which is February 10th. Okay, so here we are, and yeah, so when there's too much margin greed, right, in the market, leverage money, margin money, you gotta be more conservative, right? You want to stay off margin and only get into margin if it's an A plus play that you're very confident in. This is something we share in my group. You can see here, right? So this is the leverage in margin accounts constantly grown since April 2025. You can see it's very high. Every time when the margin leverage money is high, there's what happens and follows after that is a sell-off, right? So the market is just doing a reset, a cleansing of all that greed, right? So greed needs to be cleansed out, and that's how the market works. But you, as an investor, as a trader, you have to know, okay, when there's too much greed, you have to be more conservative with your plays. You got to be more fearful, right? And then when others are fearful, then that's when you can be greedy and you have dry powder. You can take advantage of great opportunities when companies get on sale or great positions that you can capitalize on. So here's my hood portfolio. This one, this is I'm in my Nvidia position. I have a really good cost here at 170. Okay, and this position is a little bit on margin as well. Market values here and only up about this much. And I would love to stay in this position a little bit longer. I had some great gains when when Nvidia was around 190, about $12,000, and I didn't take profits. I was wanting to exit at my cover call strike, but every time during expiration, I wasn't able to exit at that strike, even though I was selling it aggressively. So going forward, I think overall it's better to just leave the shares uncovered when it's approaching your exit strike. All right. So when you are looking to exit soon, it's better not to just don't you don't have to add an extra cover call to try to exit off the coffee call to get paid and exit at the same time. Just leave it uncovered and then you can exit at Wynn, right? When you want to exit. But either way, this account I'm a little bit in margin call. So I purposely roll down my NVIDIA to a 172.50 strike. Where it is? Where is it? There it is, 172.50 strike over here. So that's why I can exit this position and get this capital back into my portfolio. So this way I can get out of margin debt, and this way I can then reorganize my portfolio and slowly exit all those positions where I feel like my cost basis is a little too high, or just free up my capital to get off margin. Okay. All right. So either way, I just want to share this with you guys. If you are deeper in the margin and you are deeper in the red, this is a time where it makes sense. It would be helpful not to stare at your portfolio all the time. It's not going to help you when you're emotional. And if you can get help and get some type of guidance, it's always good to get someone to look at your portfolio to make sure that you are positioned to recover from this storm that we are in, right? Because if you don't know if your portfolio is set up to recover, then you are putting yourself in a bad spot. So you have to connect with somebody that can guide you and look at your portfolio to say, okay, you're okay. You can recover, and you just need to make this adjustment, and that's it. Okay. Yeah, so either way, if you found this video helpful, like and subscribe. I do have a community. You guys can check it out. I provide the links. If you do join the group, it is a 30-day, 1 month trial. I have a Facebook group, which is lifetime. And then you can see here's the WhatsApp. This is where we share information around the news and the market to help each other out. And of course, all my members can privately message me as well. And yeah, so if you'd like to subscribe if you found this video helpful. If you book a time, you personally speak with me. And then stay tuned for the second half of this video. You will see me in action working with one of my members. And then other than that, I will talk to you guys on the next one, and stay sharp.
All right, now the big topic on everybody's mind is iron, okay? Because a
All
lot
right,
of
yeah.
us are up a lot of money. Like Ricky's up 34,000. You're up like 10 plus. Um, I'm like 8 and change or something. That's the last time I looked.
Yeah.
So, but we have to be able to take this bag home, right? So, right now, before earnings, you can see it's trading at now this part right here with iron. We already know the Japanese situation is already priced in, but I think this sell off a little bit is just market manipulation. It's just shaking out weak hands, getting rid of people to exit iron, and then come be able to come in on iron at a better price because institutions have enough capital to move the stock prices by a few bucks or even more. So this is an opportunity to really you can look at your strike. You actually you can look at your strike and see you have a 64.
Yeah.
So I think you can just keep that and just exit at 64. And then you have a 70. That's for your leap. That's good. You want the leap strike higher than I mean, you want the poor man's cover call strike higher than your cover call strike. Because the
Yeah.
poor man's cover call strike, if it blows past 70, you are going to be responsible for anything beyond 70, meaning you're going to be out of pocket beyond 70.
Right. Of course.
You get it? Right?
Yeah.
Because you are selling the right for
Right. Right.
70. Right?
But my
So,
cover, my leap will cover that, no?
no, no, no. What happens is they give you negative shares.
Gotcha.
Yeah. And then, what do you call it? Some brokerages, they kind of they break down both legs, but not Schwab. Schwab actually assigns negative shares because you have a high level option assets, right?
Yeah. Yep. Yeah.
Okay,
So,
yeah.
but
So
then I'll have that leap to kind of make up the difference.
yeah,
With, right? Because it's a 50.
yes, yes, correct. So whatever you, because when you sell this Promise Cover call, the buyer wants to get paid for anything beyond that 70. You get what I mean? So
Of course. Yeah.
that's what you owe them if it goes beyond 70.
Yeah.
Sorry, I got an incoming call. Did I lose connection?
No, I'm here.
Okay, yeah. So that's what it is, and then yeah. So everything looks good. And the only thing I would say is question for you is: are you happy with the 64 cover call strike? Because right now is an opportunity to move that 64 a little bit higher if you like. You might even be able to keep the same expiration date and go to like 65 or 66 or even 70. Because
Uh,
if during earnings, yeah,
yeah. If it blows up during it, hey, get out of here.
yeah.
My brother's squirrel. I'm at my brother's house and he has a squirrel. Get out of here.
He has a pet squirrel?
Yeah, it's a tree that fell and there was a nest and there was this baby squirrel by itself. And it had just been born and the mom wasn't gonna come back because the tree was
Yeah,
gone. So he
yeah.
took her and raised her.
And it's domesticated in the home?
Yeah.
Wow, that's pretty cool. I didn't know that can happen for
Yeah. Well, it grew up in
squirrels.
here and he can't release her now because she doesn't know how to survive in the wild.
Jeez. Okay.
She'll get picked up quick.
Yeah, for sure. I mean, anything out there would see that as free dinner.
Easy pickings, yeah.
Exactly. Uh, uh, yeah, so as far as the 64 strike, you can consider moving that up
Yeah, I
at this
wonder like
time or just leave it alone.
earlier, or like 2 days ago, I think it was something like that. This was
Yeah,
up
it was close. It was at
a lot
61.
more. Yeah.
Yeah, so that's why when stock pulls back, so what happened is you realize, oh wow, it was close to my strike, and then being close to your strike, if you try to roll it out, then it's gonna be more expensive. The fact that now has a spike, a bit of a pullback, it's gonna be cheaper to close out the 64 and then move it up to a higher strike for break even or
Yeah.
even some profit there. So
So move it February 27th. So if I move it, it would be, and then it goes down after earnings, then I would earn that. But if it goes
I
up,
just don't see. I mean, I could be wrong, but I have. I'm like, I'll
should
tell
I
you how
close
confident.
out?
I'm like 90% confident that Ironson is going to do really well in earnings.
Yeah, I wonder, should I, like this 70, the three that I have,
Yeah,
the poor man's covered calls, should I close that out now?
uh, that's 320. Cost basis 16. No, it's too early. You're only up a little bit, but it's too early. Yeah, that's 320. No, you're okay there. 70 is a good point.
Okay.
Yeah,
Yeah, and that's still, yeah, 320, March 20th.
yeah.
Because like you said, if it blows past that, then I'm gonna be
No, I think 70 is a good because if even if it blows past it, there's going to
Yeah,
be profit taking 1,000%. If iron does really well, people are going to take profit. There's going to be day traders,
right.
there's going to swing traders are going to just take their profits and get out. So it's going to run up and then it's going to get break down. I mean, if you close it out now and it does run beyond 70 and you don't have a promise cover call on it, then you can sell the close earlier and take more profits beyond at 70 or higher if it does go beyond there.
What do you mean? If I closed out, you mean the leap?
No, the poor man's cover call.
If I
If
close
because
it
right now,
now,
if you close it right now, you have a profit of
two,
269.
right,
Right. So you buy the close, you close that, you leave your leap uncovered, and
right,
then during earnings, that huge when it does if it does have that huge spike up, you sell to close the leap.
right.
Right. At the highest point where you think, just keep in mind that the previous resistance for iron is, I believe, 72.
Yeah, it was where was iron?
About maybe 5 months ago or 4 months ago. Or 70, yeah, I see 76.
Yeah, that was the big
Yeah,
that was
but I wouldn't wait till 76. I would
no,
just get
no,
out at
no.
72.
Yeah. 72 is yeah, because before that it was 72.
Yeah,
This other time over here was 72.
yeah,
Yeah. Yeah, and I noticed with iron, like every time it'll ride up on the Bollinger Bands and it pulls back, then it goes up, then it pulls back.
yeah.
It touches that top one, it starts to pull back.
Just like anything, when there's a fast run up, people tend to just take the profits and exit.
Yeah.
Yeah, they don't hold it unless you're super long term on it. Then yeah, you just leave it alone. But I think it's better to just exit, get the capital back, and put it to work.
Yeah.
I would once you get your capital back, we're gonna work on the nuclear stocks, uraniums.
Okay. Yeah, like the other day, like this number here, it says 99 now. 2 days ago it was 105.
Yeah.
And I was
Well, two
tempted
days
to
ago.
just I was tempted to just close everything out and then I would have that 105 to start over again.
No, but you have earnings coming up. You're gonna
Yeah,
miss out on all the you have positions that are pos- the positions you currently have are the expectations are good earnings.
yeah,
Hood is
right.
expecting good earnings. Hood is gonna be the if Vlad on that earnings call says we are selected as the official brokerage for the Trump accounts,
Yeah.
I guarantee you that stock's gonna go. Like
Yeah, it's
there's
gonna
no doubt about
go
that.
up. Yeah, it's
Yeah.
gonna
And
go
right
up.
now it's having this pullback, it's just straight manipulation and just getting people out so that they could come back in at a certain price.
Right.
Like this is just from my experience. Like there's no reason why Hood is having a pullback right now, besides the Japanese yen situation 2 days ago.
Yeah.
But now at this stage, it's still even with the news out there, it's still having uh, hesitation, right? It's just
Right.
it's not enough movement. But I think as we get closer to the earnings and during the earnings, you'll see.
Yeah. So everything's I pretty much should just leave everything the way it is now, I think. For now. What do you think? Just leave it, right?
Yeah, yeah.
Except you said maybe get this a
Maybe
little
consider this. Look at the numbers on that. You can just go to roll this.
yeah. Let me uh this one here, right? Leg two. Custom leg two strategy. That's weird. Why is it not?
Yeah, custom
Yeah,
legs
yeah,
to sell to
right, right, right.
open. So if we keep the same day,
Yeah, but
70, you're gonna get paid. Oh, it's $1,000. Wow.
it's
If
a
you roll
debit.
from 64 to 70 to next month, it's a debit.
Same yeah.
Jeez, that's not good. I think that's very bullish signs. Like the market already placing in that you're rolling out from 60. Well, that's a pretty. You're going up 6 points either way, but still,
Yeah.
what's the difference? It's still 300 difference.
Yeah.
Yeah, and it's
Five. Probably just leave it then.
Yeah, we can just leave it.
Yeah, I'll leave it.
Okay.
Yeah, and then we'll see because earnings is not next week, right?
Yeah, earnings. It's earnings season, Q1 for a lot of stocks. Yeah, so
Yeah, it's iron is earnings are the 5th, February 5th, yeah.
mhm.
Cool. All right, good.
Okay.
Hood is
Oh yeah.
Hood
Hood is
is
the 5th. Hood
February
is
10th.
Hood is the
Hood is
5th. Iron is the 10th.
no, the other way around. Hood is the 10th, iron is the 5th.
Oh, okay.
Yeah.
Got it. Yeah.
All
So
right,
these are
cool.
all these earnings are gonna impact your portfolio.
Yep. All right.
There's more upside than downside. Judging at the landscape of the market and everything else, if I weigh the scale, you have a lot more pros than cons in this. Only thing is if the Japanese yen situation gets worse, then yeah, they can affect the investors. But
Yeah.
overall, I think over earnings is gonna override that. But we gotta exit though. We gotta take profits, get that capital back, and I was saying we're gonna look into nuclear.
Yeah.
Nuclear, you're gonna see when you look at the technicals on it. When I show you the technicals, you're gonna like it, and you can build a really big position around it and benefit from the future. Oh, I like that. Benefit from the future. That's
That's it.
exactly what investing is all about.
Yeah.
Hmm.
All right, good.
Okay.
All right, man. Sounds good.
All right. Let me get back in. Okay, George. Fantastic. Then I wish you